Hey, folks. Good morning to everybody. Sorry for just generally being a little bit late and slow this morning. Traveled yesterday, first time in a long time. Beats the daylights out of me. My body gets wrecked. I guess I'm just not in condition for traveling. I definitely do a lot of athletics, but travel is another animal. Great to be here. I'm sure yesterday's show was spectacular, and there is much to discuss. Market movement, generally to the upside. This morning, futures are green by a little bit. CPI yesterday, PPI today. More and more folks are thinking the Fed is going to sit on its hands throughout the remainder of 2026 and not move at all. Tech continuing to throw bears and bulls for ups and downs. Yesterday, market generally ended negative, but oh no, I'm sorry, I take that back. My apologies. No, positive, and this morning positive. Forgive me. Um, we've got, I think, the talk of the town is probably SpaceX, just in terms of the percentage gains over the last number of days. Sure, if you caught the bottom, you did really well. Sure, if you shorted at the tippy top, you did very well. I would guess that most people are not in either of those camps. But nevertheless, if you caught either piece, down or up, that's great. And along with the resurgence around SpaceX, we've also got some positive activity around CoreWeave, which had a second quarter that was good, sure, because of the revenue line, but net loss increased by a whole lot. Its expenses are growing, and therefore its losses are way outpacing. Its expenses are growing a lot faster than its revenue, and therefore the losses are well outpacing the top line growth. But nevertheless, the market definitely liked what CoreWeave had to give. Nebius, similarly, stock soaring. That was Leopold Aschenbrenner's largest holding. Once upon a time, stock was up 34% yesterday. In deal news, a couple deals that we will get around to discussing. I'll just put them on the table. Nelson Peltz and Trian, private equity firm ish, hedge slash private equity fund, um, in interest of Wendy's, the fast food chain stock was up 15%. Wendy's has had struggles, lots of competition in its space, beef prices, a million chicken outlets. It's just, Burger King putting a lot of money behind reviving its chain. So Wendy's has been under pressure. Nelson Peltz thinks it can take it private and turn it around. Second deal to talk about is the Los Angeles Lakers getting sold for the second time in not so many months for a pretty tidy markup from 10 billion to now this price tag is going to be 12.5 billion, and it will be bought by Bob Iger along with Josh Kushner of Thrive, who was also the guy who tried to orchestrate the investment in FIFA, who at the same time is also raising capital, raising $2 billion for his venture fund on a 12 billion post money valuation. I mean, if there's anyone who's on a massive roll, it is Josh Kushner. And frankly, I think it has very little to do with his brother or the president or the administration or his connections in Washington. This is about a guy who really has taken Silicon Valley and pretty quietly, I would say, right? I mean, he could be a lot louder and prouder than he is, especially considering the family that he comes from and the connections. And he's done amazing things. Again, he reminds me a lot in this way, although I don't know either one personally, a lot of Chase Coleman, who previously had an incredible run. Not to say he's sidelined, but one of the Tiger Cubs. Um, and then the last deal we'll talk about is the Paramount Warner Brothers deal. Because David Ellison, Paramount CEO, is now threatening relocating the company from California if there's no progress towards a settlement by October. This isn't a joke, only because I'll say the following. Hollywood has generally been disrupted. Let's put it that way in terms of filming going on in the state of California for long form and short form. A, B, because of tax incentives elsewhere, and because the industry got fed up, I guess, with the California centric part of it. The second part is the upstarts in the media industry have not been necessarily California centric, like the Amazons of the world or the Netflixes of the world. And then while I was in Atlanta yesterday, the person I was with mentioned having nothing to do with any of this. That there's a massive studio being built in Atlanta. They already have Tyler Perry's outpost in Atlanta because he's Atlanta centric, but another movie studio is being built. I also have down here in New Jersey a massive Netflix campus being built on the site of a previously a previous army base that was closed during the Obama administration. And so the departure of Paramount from California, I think, is a real thing. I mean, yes, certainly it'll come with a lot of cost, and maybe David Ellison is rattling the saber, and he'd rather just get the deal done rather than leave California. But that being said, the knock on effects going on in California are would be real. So we'll chat about that as well, along with a number of other stories that I wanted to hit on. But anyway, that was a very long intro, folks. Sorry. Eladio, good morning. Your hand, please. Did I go on for so
Sorry about
long?
that.
Okay, no
I
problem.
I just was doing something. You asked me a very interesting question yesterday, David. And you know how I've been feeling about hardware, and it's kind of hard to just call hardware and AI just hardware because there are different facets to it. There's the optical part, which I consider the weakest part in terms of price action, then followed by the semiconductors, which, if you look at the SMH, sure they've recovered, but there's some that tried to make a run at the end of the year. At the end of this cycle, before we started seeing the breakdown in semis. And they just haven't done it as well. Like Marvell, like I said, tried to recall, tried to make a push at the end, and it just hasn't. And that's more optical in nature. And then you have Nvidia that's just been sitting sideways in the 200s range for a very long time. So there's no question that there has been weakness there. However, when we go to the demand for compute power, that's where three names come to mind in that two of which had pretty good days yesterday. I think I've been clear that I tend to tier sectors into three tiers, uh, and that decides when I act or buy any of those areas within a sector, because I believe that you always want to buy tier one stocks at the in the latter half of a decline, because they're going to do exactly what Nibis did. They're going to do exactly what SpaceX did. Because I don't know if you've noticed, David, the idea of a U shape or a sideways consolidation, and then a run up, which is what we used to have 30, 20 years ago, doesn't exist anymore. It seems, when the stock gets hit 50%, you expect it to settle there because that's a pretty big hit. But Nebis and CoreWeave, I think, are in a group by themselves. In the same way, David, that CrowdStrike and Palo Alto stick out in software and started outperforming the whole space as early as. I think they started outperforming the whole space early in the spring, while the rest of the software was still licking its wounds. So all stocks are not created the same way, and obviously, I think that when you look at compute power, there is still demand there. The question is, these companies, as you mentioned, CoreWeave doesn't make money. In the case of IREN, it's the lowest of the three, quality of the three, and the bit mining area part of it didn't help them. So honestly, Nebis looks pretty interesting at this point. But the question again becomes, how sustainable will this capex spending be? And we saw that $500 billion announcement by Nvidia. We'll see how much that actually comes to fruition, where the Wall Street banks are coming in. The Wall Street banks say they're there, but what happens when something breaks or where there's an unknown black swan event that might not see fruition? But I'm going to go back to one premise here. The market has levers, David, and the levers allow this market at the index level, the S&P and the Nasdaq, to limit the damage, because there's interrotation, sort of like a seesaw. That's why I place the seesaw all the time on my thread, where money goes from one area to the other, because there's this thing called scarcity of capital at certain times. And if anybody is honest, the demise of the semis began because of the SpaceX IPO. It's obvious. There was not enough capital to fund to fund that massive IPO that now already has a market cap of 1.9 trillion dollars, I believe, or close to that. And and the S&P has a 70 billion-dollar market cap. A $2 billion company has an impact. And I don't look at SpaceX as just a space company. I see it as a mechanical lever for rotational parking of money, or at times, well, that's what essentially happened, in my opinion, with the semis when they first sold off before the demise, and that happened during the SpaceX IPO. And now, what we have then we saw that the total collapse of the sector over a period of 3 weeks, like we have not seen. And you look at the memory makers. Good luck expecting, some of these memory makers to get back to those highs. They could, but I'm not right now. I think they're better places to buy. So I hope that explains and distinguishes why those companies are rallying. I have to see a confirmation that this amount of capex is going to be sustainable for myself to commit my clients' money to these hardware sectors. But I do think that the cloud compute sector is a special sector when it comes to the demand for the GPUs that are necessary for inference and training of AI modules. And a lot of companies don't have the capital of the AI hyperscalers, and they need to rent their AI data centers.
Thank you, Eladio. Look, I'm gonna make a more elementary point, folks. The trend in SpaceX stock was not good. Even though I'm not a trend follower, it was not a good trend, and conventional wisdom would lead one to believe that if the trend wasn't good and a bunch of stock was going to get unlocked and be able to be traded and sold, the stock would come under additional pressure and then go down. That has been the absolute opposite of what has happened. So, first of all, I'm not going to,
Well,
I don't
well,
have a
David,
position. Yeah.
David, you gotta The minute Elon Musk is anywhere, everything's different. Can we at least agree there?
It's very nice to say that on an up
No,
day.
no,
I
no, no,
want
no.
to
It's
hear
back.
you
It's
say
backed
that
by
on a
reality
down
too.
day.
He is a trillionaire, right?
I understand. Listen, I'm just saying. Forget Elon for a second, and you have to forget Elon for a
You
second.
can't. That's
Come
the
on,
point. I wouldn't own.
what?
Look, Tesla in a different is a different animal. I got rid of that after owning it for quite some time earlier this year for good reason. And they're in transition, and maybe I'll consider looking at it again. But right now, it's in a transition, and we don't know. It's in limbo. But SpaceX is in what sector? Is it just space?
No, but the point is, it is impossible to put a valuation on that company, right? I
Like
don't think.
Amazon. Did you put a valuation on Amazon way back in 2014 when it was
I
at
no,
$15?
I did not. I did not. I'm just excuse me. I'm sorry. The point I'm simply making is that this was for those that felt that Elon was going to conquer all, no matter what the pressure was on the share price, in the face of unlocks that he can't control, right? That will continue throughout the rest of the year, right? That is not an easy logical argument to make. I get it. You have an X factor here. I got the X factor. The fact that the X factor can overcome all of the other logical factors is just it's outstanding. I'll just say I'm not
Can I? Oh, wait. One more point. Can we be honest and admit that this company should have gone and Anthropic should and OpenAI? We shouldn't be IPOing trillion plus dollar companies. Can we agree that there is a mechanical structure that the market isn't able to assimilate? The all of a sudden these huge behemoths.
there okay, let me just cut you off there because then I'll give it to Brand. I know there's a lot of hands and we're going to get to them, okay? Everyone get to will get to make their points. But I'll hand it off to Brandon on carrying up following up on your last point, Eladio. The FT reported this morning that October's IPO for Anthropic is going to be at a valuation of $2 trillion, my friend. 2 trillion. Now we can all laugh. We don't think. We think it's crazy. I don't even know. We're in La La Land, folks. Like rents in Manhattan, in Brooklyn, are super sky high. At the same time, the United States is going to sell $25 billion of 30-year bonds today at its highest borrowing cost since 2001. This market overall plus market plus economy believes that we have an unlimited amount of turbocharge. I mean, we are soaring to ever higher highs, and in the face of a lot of other crazy stuff. And I just listen. I'm going to give it to the only other thing that you need to talk about, Brandon, is the other deal that was mentioned, which is Anthropic buying Descartes for $6 billion. So I give it to you, man, and then we'll go around to Eric and Dave Nikoski.
All right, depending on the time of day, get your coffee ready or get your drink ready. Don't care which one, just go for it because this is what I've been trying to say. I mean, David Towel, like I have, I don't know if people even listen to me or if my mic is on in this space because I did make the logical argument for why SpaceX would do well. I mean, I literally sat here and ranted on it and got destroyed in the comments. And guess what happened? It happened. And here's what we have to understand. And all of you are public market investors that I respect to the highest degree and, love listening to and learning from and et cetera. But here, there's a new reality that you all have to accept. And that new reality is this market is not 1985. You cannot work on or deploy capital in this market like it's 1985 or like it's 2005 or like it's 2008. We have to start understanding that the line between public markets and private markets is thinner than it's ever been. They're converging. And so, with that understanding that they're converging, You have to really change your mindset on how you're valuing these companies, the stories and narratives behind these companies, and how they're going to operate in the future going forward. And if you're unable, and I'm not, when I say you're unable, I'm not speaking to directly to the people on the stage here, but if I'm speaking in general, if you're unable to make that mindset shift, you're going to lose money. People started shorting SpaceX because they said there's no way that this valuation is attainable. I mean, I saw some of the craziest stuff. People saying it's going to fall below $50, it's going to fall below $30, and I just, because of this unlock period, and oh, everybody know, all these shares are being unlocked. It was asinine from the beginning, because here's what happens: those investors are the believers in Elon. They're the greatest investors in the world, and you can call it a cult, you can call it whatever you want to call it, but guess what? Those investors returned money to their funds, and those big funds, it's not just individual high net worth individuals. It's not just, oh, the super rich are getting richer. Guess what it is? It's pension funds. It's 401ks. It's all this other. It's sovereign wealth funds. It's money being returned to people indirectly. It's CalPERS, CalSTRS, CalPERS. It's all these different funds that is actually your grandparents' fund. Somebody asked me the most ridiculous question the other day. Would you want your grandma's money managed this way? Yeah. Yes, I would. My grandma's dead, but I'd love her money to be managed this way. I mean, because these people are betting on it. And guess why they didn't unlock, or why they didn't sell? Because the next time Elon starts another private company, he's going to say, "Oh, you shorted my company? Look at it. Look at his battle with Bill Gates. Oh, you shorted Tesla? Oh, you sold the second it was unlocked? Guess what? You're not involved in my company anymore. You can't, no, you have no access to this." He has unlimited access to capital, and he can pick and choose which investors get that access. The investors that get that access make money. End of story. I mean, it was that simple with this, and you have to change your priors on how to invest now. And I'm not saying SpaceX is going to skyrocket tomorrow to be, this huge company. It's going to take time. I think in my opinion, it's been a long-term play. There's probably going to, it's going to ebb and weave. It's going to go up and down. That's just, it's the way the markets work. But we cannot sit on our laurels from 1985 and expect to make money in this market. That's point number one. Point number two, the Anthropic and Descartes thing. I think it's a great story. I'm not 100% certain on this. A lot of times what happens now is that these rumors get floated, and it's either the company's going to raise more money, or investors want to sell secondaries and they want to go ahead and try to bump the valuation of it. But if it does get sold, which I honestly, I hope that it does, what a fantastic story. This company was founded in 2023. Like, it's still a newer company, and it's about to sell for 6 billion, which, by the way, would be Anthropic's biggest acquisition to date. And we've talked about it prior, that OpenAI has been kind of on a buying spree with these, making acquisitions. Think it's fantastic. Now it looks like Anthropic's kind of entering that game, maybe to help justify their valuation, maybe to lower costs on training these new models. Because if they can even lower these costs by 5%, 10% or more, that's a huge win for them and for the industry. Do I still think that they're going to be able to value at 2 trillion plus? Personally, no. But in this market, who knows? And then there's a third point here that hasn't been mentioned yet that I think is going to help propel these companies, and maybe help Anthropic with their justification. The government, this administration, is working closer with private companies than any administration ever has in the past. And I think you can't discount that. You have to, and to me, that's fantastic. I've said it for as long as I've learned about venture capital and private companies and whatever, and started my own company and then started my own fund. I've said that our government should be working closer with private companies, because that's where all the the reality is happening. That's where the future is being created, is being made. That's what these private companies do. That's why it's exciting to invest in them. And what people don't realize, like, I'll give one story example. There was an example that our we're running out of munitions because of what's going on in Iran. The government said, oh, this is unacceptable. You know what, we're going to start getting with these private companies and tell them they got to step it up. We'll give them the money. We'll give you the money. Just show us that you have the effort and ability to go ahead and execute if we give you this capital. Before, it used to be, to get these government contracts, I mean, years long processes to go through and then get awarded the contract. They're fast tracking all that. Then just today or yesterday, last night, it was announced that we're going to be using private companies for cyber attacks against enemies of the United States. So that'll be likely the Anthropics, the OpenAIs, et cetera, of the world, or other private companies. Tremendous. These people it's not cyber attacks against citizens, American citizens. It's against the bad guys, the criminals, the people that are enemies of the United States. So we said we're going to utilize these companies with authorization from the government to do that. We're working closely with private companies. And so, when you start looking at all that, you have to understand that's money going to these companies. And so when they do IPO or they do whatever, that has to be taken into account. And so, I try to explain this private market stuff to all of you, again, to back to my first point, because it does heavily involve with the public markets. It is directly correlated with the future of where we're going to see these public markets go. And you have to understand how the public markets, or how the private markets work, if you want to invest in the public markets in the future. You can't look at a chart and say, well, from 1985 up till 2003, this is how it's worked. That's just not the reality any longer. This is a new environment. And let me make one final point. The environment's going to change drastically the second Anthropic or OpenAI IPOs. It's going to change. We've never seen anything like this before. We just had SpaceX's. Eladia has made some great points and way more articulate than I am. I don't care, but he made some great points around the fact that where did all this capital come from for SpaceX? Well, guess what? We're about to get a double whammy with Anthropic and then OpenAI. Likely, 1 trillion, 2 trillion, 3 trillion. Who knows? Who knows? And so the markets are going to change drastically when that happens. And if you're investing other people's money, you have a fiduciary responsibility to understand how this works. And so I'm talking to you and letting you know that this is the future of investing in private markets. And I'll go look through the comments. I'm sure you're all trying to destroy me here in the comments. I don't care. You're wrong. I talk with these people daily. And then shout out to Kushner. Dude, he's one of the best people in the industry. One of the best people in the industry. Like, not only just investing wise, but I had the privilege of having a one-on-one call with him. This was probably 2 years ago now. We're not personal friends, we're not close friends. But one of the nicest guys in the industry that I said, oh, I'd love to talk to XYZ company. And he literally set it up within 5 minutes to have that conversation with that company. And just the nicest person in the world. He's a genuine person. I love the Lakers. Lakers have always been my team, so I'm glad to see that happen. Bob Iger getting involved is really interesting. The only part that I don't know about this is apparently they were trying to, get a Las Vegas team, and maybe LeBron was going to be involved in that as well. And now, who knows what's going to go on with that? So that's going to be something to keep our eyes on. End of my rant. Hopefully, you enjoyed your coffee or your drink.
That was a lot. We'll go back over some stuff. The government involvement point, well taken. Just a quick question, quick answer requested. Do you think Anthropic goes public in October at a $2 trillion valuation?
Yes.
Amazing. All right. Let's go, Eric, and then Nikoski. Go ahead, Eric.
Okay, if Anthropic has a $2 trillion valuation, very soon it will be destroyed, in my opinion. I cannot say a time frame exact, right? But because you have to sustain it over the long term, And if the math isn't there in terms of profitability, then it will not be sustained. In order to sustain it, it has to be very competitive with Grok, very competitive with OpenAI, very competitive with the Chinese models. The exception to that is indeed when money comes from the US military, and Brandon knows this, and you know this too. In which case, if they do inject a lot of money from the military side, they could have a high valuation, especially if Trump gets his $500 billion extra for it. Whether or not the Congress will give it, I don't know. We'll see with time. Yeah. What I wanted to say is that I agree with Eladio for how to evaluate what's happening for the Elon companies, for the market sentiment. You see, I like inflection points in market sentiment. SpaceX did not surprise me at all, David. Like I told you when it was coming out, even the first day, it went exactly in the range I expected it. I expected it to reach 200 in this euphoria phase. I couldn't say whether euphoria would be 2 days or 2 weeks. No way of saying that. I just had to observe it like everybody else. But I did say that it was going to be peak euphoria. And we had Sam Altman's comments also, which changed the sentiment because the reality of the financing of AI came to light. So to me, that was an inflection point, and I'm glad you observed it as well. It became an inflection point for the market, even for the semis on that IPO of SpaceX during that week. And you remember, guys, that's when I told my brother to get out of his what was it, SanDisk that he has bought at 2,300, and it has retraced since. There's a timing issue there. Now, for the longer term, and that's very important, I don't go short the markets anymore. I just don't, and there's a reason for that. Unless you have a very, very sharp timing, and for a short time, like sometimes Nikoski is doing, I don't, because the massive money printing is such from the government that you have, when you look at the probabilities, you're much better off buying the dips than shorting the rallies. It's just pure mathematics. And at the level of debt that we're printing, the S&P 500, if it gains 10% per year, it means the economy is horizontal. This is just the money printing.
Bravo, Eric. Bravo.
Yeah.
Spot on.
And so you're better off buying the dip when you're a super professional. Both George Noble in his own way and David Nikoski can do it. Sure, Nikoski do it technical. George Noble has that theory of, which is our theory of markets. But on this, I will agree a bit with Brandon more because, and with Eladio, SpaceX and Elon are special. That's the reason that they got such a huge valuation. I would just not short it because it doesn't make sense for me to do it. There's so many people who are willing to buy it. Remember, what values a stock? Yes, profitability, but second, how much people are willing to buy it and at what level. So when it retraced from 200 to 100, at the 100 mark, there's a lot of people who are coming to buy. The question that David was mentioning, David Tawil was pointing out that we don't have enough data. David Nikolsky was pointing out we don't have enough years of data to make technical analysis on it. Yes, but so it enters price discovery. The first month or two is price discovery. At 100, the buyers came in full force. Yeah, at 200, they're willing to sell. So you have your range where you can now estimate where because this is what markets are all about. Where are the buyers willing to come in force, and where do they think no, now the sellers are gonna outstrength the buyers. Sorry for my outstrength. I don't know what's the word in English, but you understand what I mean. And this is very important. And this is why, unless you're a real pro, you're better off buying the dip. And when the stars align, so when there's an inflection point, I like doing it that way. Yeah, well, there was an inflection point for gold, inflection point. I got out as well. Inflection here in the tech sector, because then you have the stars aligned. If you buy the dip when it's time, the market is going to be positive again. The news are getting positive, the economy is getting positive, and you choose your stock well, you have a good momentum behind you. Vice versa, when the market is souring or your sector is souring, and you time yourself properly when there's an inflection point, your probabilities are much better. But as a rule of thumb, for those who are beginning to mid-level in terms of how professional you are in financial markets, because this show is for you, the audience, more than it is for us, the panelists. Try to buy the dip and try to understand what are the factors that influence because a lot of you will buy stocks, some of you will buy the ETF or the index. Yeah, if you buy the ETF and the index, you have to understand these macro things that are affecting the whole market. If you buy an individual stock, you have to understand the stock and that sector. Very, very important. Back to you, David.
All right, we're going to need to interrupt our regularly scheduled programming for a minute or two to discuss PPI Andy Kaufman. I'll just read it off. PPI month over month, the expectation was zero point 0.2. It came in at 0. Core PPI month over month expectation at zero point 0.3. It came in below that at zero point 0.2. The year over year non core, just regular PPI, 4.7. The expectation was 4.9. So again, off or down, lower than expected. And then core PPI year over year came in at 4.2, a little bit hotter than the expected 4.1. Your thoughts on PPI, and if you didn't get a chance to comment yesterday on CPI, please, both of them.
Yeah, good morning. Good morning, everyone. I think the big thing here is, well, David, uh, absolutely 100% correct with the levels that you spoke about. The big key here, I think, is really to look at the revisions. So the revisions were up zero point 0.2 month over month. So when you look at the absolute change in a 2 month period, right, it was spot on, right? Because you're getting uh, no change but a zero point 0.2 revision. So it's a 0.2 to this month or last month. It doesn't really matter, but the prices were hotter um, than they were. So they came exactly as expected if you factor in the revisions from where they were, right? Because you're taking a change from a higher level in that regard. So, but outside of that, and you have to remember last month we also had the cooling off because we were looking at the lower oil prices for the month and different factors that were going on around the war that was feeling a little bit better. So the fact that those came even in hotter, I think, are a little bit disappointing in terms of the overall story. How this ties in, yeah, I was able to comment briefly yesterday on CPI. The numbers have pretty much came spot on to where they were. The market took it as, oh, this might be a little bit reprieve for the Fed and Warsh not to have to necessarily move. If you look at the price of futures, we're looking at around a 38% probability of a hike now in September. We should get another read before that, but obviously we got Humphrey Hawkins before then, so it'll be interesting to see what Warsh has to say. Again, at this point, I still believe that Warsh doesn't want to move. He doesn't want to do anything. He's going to talk the market. He's going to try and make rates do the work for him, with him actually not having to move rates higher. He's going to put the pressure more on Besant to take activity, and I really do think that there's a coordination between those two. The real thing that is the game changer for me, and which really interesting, is this movement in fear in work that the U.S. is doing, and particularly the Treasury with Japan. I think the fact that we're so scared of them selling however many billions of treasuries into the market with intervention, which, as we all know, typically intervention is not successful and only has a short-term help to the market. And we've already seen it, right? With the first intervention, we got down to kind of 156, 157, and we're back up to probably 159, 160 today. So, it's short-lived. We're really that concerned with 75, 140 billion or whatever that looks like of sales into the Treasury market. I mean, that's a monthly auction right there. So, the fear of rates moving higher is causing Besant a lot of concern, especially for the funding costs. We've got inflation. It's going to be above target. It's going to stay above target unless these longer term interest rates have an effect. And that's what's moving markets. And maybe Warsh is just saying, hey, I can do whatever I want to on the front end, but that's really not going to cool the economy off. And I think that, in fact, he's saying that we've got to get the longer term rates to move to cool things down. And then eventually, once that gets controlled and we get a little bit, less issuance, less into the market, then it makes sense to start lowering rates. So I think he's going to try and talk this thing as much as he can, but not actually move at the end of the day. Back to you, David.
Excellent. Thank you for that. And yes, just off of the back of the PPI, Beth Hammock, Cleveland Fed, was one of those that voted for a 25 basis point rate hike last meeting. Erdy came out and has said loudly rates need to rise right now. Not that Beth Hammock is, surprisingly hawkish. It's to be expected. I just think that this Fed may say a lot less in public formal statements and may war a lot more in the public sphere in press conferences and at other events. We'll wait and see if things are getting maybe a little bit testy inside of the Fed, and Warsh just trying to maybe bureaucratically, drown everybody in work, and the working groups that he's got going on, task forces, and so on. So maybe that he doesn't have to do anything and obfuscates, anything in terms of real action inside of the Fed. But I'll leave it there. David Nikoski, good morning to your hand, sir.
Hey, I was going to jump on the SpaceX topic. There's a lot of degree of speculation out there. Elon knows how to play, the ecosystem, and he's a genius at it. And when you look at, the success of how Tesla, began, it was through carbon credits, right? Taking advantage of legislation to, propagate, a move in Tesla to the upside. If he's looking at this in his eyes and he doesn't get inclusion into the S&P and the MSCI indexes, the one way to do it would be, to do a merger with Tesla. And I think that's why they're ramping SpaceX more than anything. He knows the game. That this passive fund system, it is what it is. We created a monster, and it's all fund flows, and that is where I think this is going to go. And it's going to be regardless of valuations. And I would say, unfortunately, that's the system we're in, but that's the system we're in. On another topic, I've been very bullish the restaurant stocks. I put out some of our research that we sent out months ago. If you look at, Cheesecake Factory, Bloomin' Brands, BJRI, I mean, they are absolutely killing the market. I mean, we have this, as we call it, a K shape, but even the high end stocks have not performed, in a characteristic associated with, what we've seen in past with K-shaped economies. What you are seeing is that the wealthier may be stepping into a Darden's restaurant or, a Chili's, for instance, instead of going at the top end. When you look at the fast food universe, there's a distinct, structural difference between what you see in a McDonald's stock and any of the casual dining stocks. I had very few shorts out there last week that that hit my short report from a perspective of technical illustration, right? Me playing with a crayon, but this week I'm getting a lot. Nike continues. I've been bearish for 2 years. Onion, ONON. That missed numbers. Under Armour. I'm seeing a lot of breakdowns. I mean, last week my list was very small. This week it's huge. On the inflation front, when I'm looking at, what the high energy prices, especially diesel, a lot of your trucking stocks are down, 25%. And I put a note out, a few weeks back, asking if Craig Fuller would come onto our show again. I'm seeing it in, stress in the concrete companies, and I went through and did just a preview of, what's affecting them. It's higher transportation costs, right? Transportation costs are a big part of their bill. So when I'm looking at, the market and seeing, how are diesel prices affecting companies, it is affecting them and considerably. So, aside from the inflation, the CPI is a number, in my opinion, that's absolutely made up. I mean, it is just made up. What is healthcare? 0.4% or 0.5%? Did anyone's health insurance go up this year? I bet everyone in this room pays more than 0.4 or 0.5%, even if you were making 100,000. Like we have created, like, AI can do a 10,000 times better job. I was at Costco last weekend. I posted it on X. I was going to pick up some steaks. For the last 5 years, it was $17.99 a pound. At my Costco, it went up to $20.99 a pound. I was just there 2 weeks ago. It was $17.99 a pound. So, there's all different ways to calculate CPI. We unfortunately go by a number that, in my opinion, is made up, right? I mean, it is what it is. So, we'll just keep projecting it off of fictitious, arguments. When you look at the healthcare portion of it, they changed how they calculate it 2 years ago. Why? Because it was getting out of control. Owner's equivalent rent is dropping, but in some areas, as you said, David, when you try to control rent prices in New York, what's happening. A lot of these places are pulling their apartments off the market, right? And therefore you get a shortage because they would rather not rent it out at a loss. Better off if you have the capital just to sit on an empty apartment. So, there's a lot of intricacies that I can't get my arms around it, but it's something to, at least be aware of. So back to you.
Super. Thank you, Dave. Let's go with Lumi and then over to Carlo.
Morning, David. I'm going to be quick because, to be honest, David, in about 15 minutes, Bill Ackman's got his earnings call on Spaces. So I kind of want to go in there and ask a question because I do own like a few shares of Perishing Square. So sorry, but that just a heads up to the audience
We,
as
we
well
don't we don't
because
we don't take it personally. Go
yeah.
ahead and have at Bill.
Yeah, and then I was going to quickly get into a few things. So everyone's talking about 1985, feeling like that. I think it feels more like 1988 and 2000 at once, which sounds really weird, but it does feel like the Japanese yen carry trade crisis with the a bot trading like crisis potentially coming up in October, and also the top of like the .com bubble at once. It's weird, but at the same time, maybe it might not be this year. It could be next year, but it just feels like that, you know. At the same time, no one can call the top, and shorting the top, like Brandon said and a few other people said, is just crazy. And I fully agree with that. So Michael Burry, you're playing with fire until it doesn't work for you. I don't know what you're thinking. You know, definitely wouldn't short Palantir. And then onto the side note, inflation. I think they're just holding it where it is, in a weird dance, to be honest, because they're kind of, I believe, using AI to understand where the maximum thresholds on the market are and avoiding those areas so that they can maintain this, I would say, recovery at high inflation rates technically, which we're not seeing, and high rates technically as well. They didn't cut, they held them the same. Market hasn't really unwound or anything like that. If anything, it's become even more robust. And I really do believe more and more that they must be using AI to help make better decision making, which I don't know if they are, but that's my speculation because the soft landing came off very well and a few other things happened quite well. And we're moving into this next phase quite well, even though there are massive geopolitical stresses and huge energy stresses, which my dear friend Anas is going to bring up in a minute for sure. So, yeah, anyway.
Excellent. Thank you, Lumi. Enjoy the space with Bill. And let us know tomorrow, please, if you hear anything, particularly on the GSEs. I know he's changed his portfolio a lot over the quarter. He owns, I don't know, some interesting stocks now: Visa, MasterCard, Netflix. I forgot what else is now in, but
He sold Google. He sold a few other things as well.
he's a big
But
Uber holder.
yeah,
Yeah.
it's weird. But the Visa Mastercard thing is interesting as well because of like, I mean, Carlo down there is going to jump into it with stable coins, and there's all these threats to Visa Mastercard's monopoly, which I mean are very unprecedented. So it'll be interesting to see what his thoughts are on a few things. I mean, yeah.
Yeah. No, thank you very much. Oh, by the way, jobless claims out. The expectation was for 202,000. It came in at 209, so higher unemployment. Continuing claims, though, came in a little bit lighter than expected at 1.77 million, as opposed to 1.79 million on the continuing side. All right, Carlo, over to you.
Good morning, David. Good morning, everyone. Yeah, I tend to agree with what we've been saying. I think that, and I've said this for a long time, that there is definitely a coordinated effort between Warsh and Bessett. And if you look at the probabilities of what's coming, we're entering a midterm election cycle. We have long-term treasury rates at near record highs, which is unsustainable considering what the interest is to pay these debts. And what do you think they're going to do? Do you think that they're going to raise rates in that environment and completely tank the economy and do all of this on the verge of a midterm election that they absolutely need to preserve control in Congress? Or are they going to behave in the opposite direction where they're going to actually find a reason to cut rates in order to push all those long-term bonds into all those short-term bonds that they're forced to buy right now into long-term bonds where they can renegotiate those rates, take pressure off, and I think that's what's coming. And if I'm wrong about that, it's my opinion. I'm not giving anyone financial advice, but I think if you look at what the probabilities are, given the tone and the messaging that's coming out of this administration, they fully intend to run this economy as hot as possible because they believe that they're entering into some sort of super cycle, and that's probably going to be driven by AI, but set that aside. With respect to what's happening in crypto, David, we're still Groundhog Day.
Carlo,
Yeah,
Carlo, before you get to that crypto, can I ask you a question?
sure.
So this is kind of the point that I'm making, and I think you're probably the best equipped to answer this. If they're going to run it hot and they're expecting AI to drive this economy, do you believe that they would let any of these AI companies fail?
No, absolutely not.
Too big to fail.
And also, you need to look at it from the perspective of, I think everyone is far too focused on inflation. I think people need to think more about deflation, which is what AI is going to bring. And when the cost of labor goes down tremendously, in a world where labor force is shrinking, population growth is shrinking, the disinflation of labor by AI and robotics is going to make up for the demographic challenges that we have all over the developed world, where population growth is stagnant and negative. So the bet is that this is going to actually create an economic super cycle. Now, that's exponential futurist thinking. I get it. If you're interested in that type of thinking, follow people like Jordi Visser. Jordi Visser has very strong thesis on this. Raoul Pal has written extensively about this. And they probably are onto something here because there is no way to grow this economy under the current demographic crisis that we're under. So there has to be another way to generate growth, and AI is the only conceivable way out that anybody can find, I think. So I hope that answered your question, but that's my thesis. I think, yes, they're not, AI is, like Lumi said, it's too big to fail. Absolutely.
Hey, Carlo.
Yeah.
Carlo, if I could jump in real quick, just to say one thing around the inflation story. I agree with 99% of everything that you're saying, especially around the election. I think the one thing is that by not moving the front end higher, right, they're moving the rest of the curve higher. And I don't believe that's what's really going to slow the economy. By moving the front end by 25 or 50 basis points, that's not going to tank the economy, right? That's not going to do anything. That's on the margin, and that's what the banks borrow at. But that, if anything, that's going to help the curve. But I think what they're doing now is going to have a better chance of taking the economy. Small nuance to that, but that's just what I kind of wanted to find.
And that's where I think, Andy, I agree with you. And that's where I think it's a two-front assault, because not only do they need to go either neutral on rates or cut rates, and that will have negligible impact on all of this. But I agree with you, there will be obvious pressure from other directions because you can't swing the pendulum too far one way without it counterbalancing the other way. However, stablecoins, I still think, are the dark horse of this race that have not been totally factored in because the Genius Act is not yet fully live. The regulations are not finalized. Once that goes live, it ties into what I've been calling the Bessett Doctrine, which is I think that the decline in global treasury demand that we are experiencing, China's buying less and less, holding less and less, I think will be absorbed by the global demand for easily attainable dollars. And the easiest way for countries to acquire dollars will be through digital dollars, which are stable coins. And every stable coin created under the Genius Act, which has the stamp of the United States on it, will generate treasury production. You will buy treasuries to back those stable coins, and that's where I think he's going to make up the decline in treasury demand. He's playing a very, very long game here because he realizes that we are quickly pivoting from a petrodollar system, and there has to be some other way to generate demand for U.S. treasuries, and that demand is not going to come when the dollar's running as hot as it is, which is why they're also trying very hard to cool the dollar. At least that's my thesis, Andy. You know far more about this stuff than I do.
No, and I think you're absolutely right. The problem with the stable coin is that's going to be more of a T-bill story where you're not buying 10-year treasury. So how do you get to demand and term out the debt further is the concern, right? Is the concern I have and we have as we're trying to evaluate the path of rates.
And that's why they can't raise rates anymore, because if they raise rates, they're going to push more into short-term into the short-term bills that we're talking about, and the long-term bills is where they need to put their money.
And the other
And it will
point
strengthen the dollar even more.
that Brandon brought up, I just want to bring up the too big to fail. We're in the Lehman, Wachovia, Bear Stearns environment we were in 2006 that they had with CDS and all these interbank relationships with leverage. The relationships that you've got with NVIDIA and OpenAI and Google and the investments and reinvestments, that if you let one go, it's going to take down the whole system. I mean, they just did a $500 billion deal, and we're barely even talking about it. I mean, we're not even blinking our eyes at $500 billion. Like it's just crazy the numbers that we're talking about right now, and the effect that it could have on an economy globally, right? It's just massive, and the fact that they're so interlinked and intertwined that you can talk about Clarity Act and everything else all you want. They've got to make sure these things go successfully. Otherwise, they're going to take each other down in a heartbeat, and the whole system's going to just blow up spectacularly.
But
so
this is
I
why
think they're never going to let them go. And I'll stop there because I jumped in a bunch. I apologize.
No, you're okay. But this is why they want us to buy dollars, though. So you have to buy dollars to buy any AI right now. Think about it. And if you're buying dollars, you then, if it becomes a stable coin, you're buying treasuries. And this is actually the whole circle. If you really think about it, this is what they're setting up is AI, as long as it continues as a revolution and not a bubble, then it means that this whole game continues as a super cycle, which is what we've been talking about. But I do have to go, and this is a great conversation.
Thank you, Lumi. And thank you, Andy. Thank you, Carlo. Anas, let's go with the energy report and then we'll get to Eladio's hand, please.
Good morning. Since the petrodollar was mentioned, I think you guys got it backwards. And the reason why, because all we are doing right here when it comes to petrodollar is instead of importing the petrodollar, we are making it within the United States by making the U.S. the energy dominant in the world. So when it comes to shale or comes to California, I'm going to talk about California in a minute, but it seems that the petrodollar is just being shifted in terms of source, but it is going to be there. Oil prices are down by about 2%, and Brent is around 87 right now. The issue of Hormuz basically is still dominant. Iran is saying Hormuz is under its control. Trump is saying Hormuz is under its control. Both of them are lying. When it comes to Red Sea shipping, it seems that we have some issues with the data available. And the reason why, because the Saudi fleet is completely off. So the AIS is completely off. So if the media and others cannot monitor those movements, no one can know. Monitoring this through satellite is very expensive and time consuming. And if there are clouds or haze, those ships cannot be seen. We do have other methods to track it, but there is more oil going through the Mediterranean than what is reported. And in general, whatever being reported by the media and the tracking companies, whether out of Hormuz or the Red Sea, consider that is the minimum amount of shipments, not the exact shipments. Um, the New York Times is reporting that, and this is the headline I'm reading right now, Gulf oil giants are spending billions to build ways around the Strait of Hormuz. This is highly, highly exaggerated. There is only one project, which is the UAE project on the pipeline. Everything else, basically, it just talk. And many of those projects basically will not materialize. So think about it in a meeting, or just like we are sitting here discussing things this morning, and I say something, and David says something, and Carlos says something, and then people will go and report that as, oh, experts are talking about this and this and this, and while it's just kind of, just a talk. So the same thing for spending billions here that the New York Times is talking about. And so the bottom line on this is we got to be careful and distinguish between what is planned and what is being discussed. Anything could be discussed. Yesterday we had three major reports. It was a very busy day yesterday, and OPEC released its monthly report. The IEA released its monthly report, and OPEC shows a very large increase in production. But when you check supply, which is the exports, is way, way lower. So we got to be careful here and distinguish between production and supply. OPEC lowered oil demand for those who are talking about no demand destruction or no demand decline, etc., and denying that. Basically, they should read the IEA and OPEC and the banks and everything else. So OPEC started the year by a forecast of a growth in global oil demand by 1.4 million barrels a day for 2026. Now they lowered that to 580. The International Energy Agency, the IEA, started the year by saying that growth will be 800,000 barrels a day. Now they are saying it's minus 1.6 million barrels a day. So the difference is 2.4 million barrels a day because of the Hormuz crisis. I think the IEA is exaggerating the decline in demand. I'm saying this because of several pieces of evidence. We did release three reports yesterday on our own where we criticized the IEA, and we explained the statement by the U.S. Energy Secretary when he said 9 million barrels a day passing Hormuz, etc. And then the last one we talked about was the EIA report that U.S. oil inventories jumped by, listen to this, 17 million barrels. And this shook a lot of people because they were expecting a slight decline, and then they got one of the largest build in history. And people doubted that, and many people are talking about Trump basically playing the game and manipulating the market, etc. In our report yesterday, we explained that is not the case. This is, it's very easy to track. And what most analysts missed is that this is a diesel issue. This is a crude quality issue. And once you focus on those two, it's very easy to explain why we ended up with that high number. India, and this is part of the news, that India seeks more US LPG, that liquefied petroleum gases, that's mostly like propane. And the objective is to cut Middle East reliance. And the objective is basically to have 15% of imports coming from the United States. So that's what Bloomberg is reporting. So to cut Middle East reliance, to increase US dependence, and they want 50% to come from the United States. The title and the story is misleading. And the reason why it is misleading, because all they are doing is just converting purchases in the spot market to contracts, which means that for months now, they've been buying the same amount from the United States at the expense of Middle East because they cannot get it. So the idea that it's at the expense of Middle East does not make sense because you cannot get it from the Middle East anyway. So the whole idea here is it is exactly the same amount. They just want to convert that from spot to long-term contract so they can reduce the cost. So it's not going to change any balances at all. And that's why the article is misleading. Another important development, and you heard this last week when I said that the Iraqi government is offering its oil at a discount of $30 to $40. The only issue is you need to go and get it. $30 to $40 is a very, very massive discount. And anyone, if you really understand how to bribe certain people in Iran and other areas, you can make a lot of money. You need another Michael Rich, basically, to do it. Well, now we found out that others are doing it, and one of them is ADNOC, Abu Dhabi Oil Company, because they already built a new system to sell their oil, and they told the Iraqis, look, I'm going to buy your oil, and I'm going to send it through my system. And they can pocket probably about $20, $25 on each barrel. So it's a lot of money to be made out of this. So classified, is it going to be classified as UAE oil or Iraqi oil? So there will be some confusion until this is sorted out. Reuters reported the story, and I'm going to read the title to you because this is another kind of a media mishap. It says, Gulf oil spill fast becoming worst in years. I say, okay, I'm going to read the article and see where is this spill. And the spill is in the Indian Ocean, in the Arabian Sea, which is part of the Indian Ocean. Has nothing to do with the Gulf. You can check the map. It is literally, if you look at the border between Oman and Yemen, it's like around that area. It has nothing to do with the Gulf. Why they are linking it to the Gulf? I mean, are they looking for kind of clicks, or what the objective? So, but this is not the only problem. The problem is now that the oil spill has become a major disaster, attracting international attention, the media has stopped talking about Ukraine's role in the explosion on this ship. This ship has nothing to do with Iran. This ship has nothing to do with the whole conflict in the Middle East. Wait, Ukraine for explosion on the ship. So now by linking it to the Gulf and focusing on a major oil spill, they create the impression that this might be connected to the war or the region and exonerate Ukraine. And this is kind of really getting, when it comes to the media and the way they are covering those stories, this is kind of getting crazy. Here is another reason why it's getting crazy. The journalist who wrote that unwittingly claims that the ship has no insurance from a reputable Western agency. But you go to the beginning of the story, and the same guy is saying that this is a sanctioned vessel. Sanctioned vessels do not get insurance from Western agencies. So I don't know. I mean, just kind of like it gets crazy on those reports. However, this incident, since this is becoming an international news and a big oil spill, this leads to a philosophical question. Who is to blame for this oil spill? Assume that Ukraine basically was not responsible for the explosion on the ship. Just take that probability completely out. Would this ship even be sailing, because it's a very old tanker, would it be sailing if it's not for the sanctions on Russia? We will now see the media and officials basically pointing fingers but they will refuse to go beyond the political narrative to confront the real source of the problem. The only reason why we have those oil tankers still at sea instead of being at salvage yard somewhere in Bangladesh or India or some areas is the sanctions. Sanctions basically extended their lives. Now, I don't want anyone to conclude, oh, we don't want to sanction Russia or we don't want to punish Russia. No, I'm not talking about that at all. I'm just talking about how government policies sometimes lead to unintended consequences, and this is one of them. The last piece of news is, and I put that in the nest, Brittany Kelm at White House Energy Aid. She is part of the National Energy Dominance Council. She is taking a position with Sable Offshore. This is a very important development because Sable has problems with the state of California, and they wanted Trump to interfere because they are in the federal waters, but they cannot get the services they need because the state of California basically banned them. They have problems with pipeline and other things and loading, etc. So, and we have, by the way, we have a lot of oil offshore California. I'm talking about federal offshore, a lot of oil. But because of California banning a lot of things, you cannot get the services from the state. So by Sable basically hiring someone like Brittany, basically from the Trump administration, to be their lobbyist in Washington, this might lead to something. And if they are successful, their stock will go up substantially because it was hammered because of the losses they encountered with California. But this move probably is a big move if they are successful in making changes. Back to you.
Superb on us. Thank you very much. Eladio, to you.
First of all, I just want to say how honored I am to be in the company of such knowledgeable people at different areas. I mean, on us, the knowledge that you just give us every day. Same, Brandon, on the private debt and private equity side, and David Nakoski with your technical analysis. And I know George just entered the room here. He's another, really I consider a legend in the business. We're just so fortunate to be able to exchange ideas here in this venue. I'm gonna let's not forget Andy, who always gives us a very clear picture of the monetary policy. I want to go back to the monetary policy discussion because it's obvious to me. In the same way I used to say, don't listen to Donald J. Trump's words, just look at what actions get taken. I'm going to say the same thing for Kevin Warsh and the Fed. Don't listen to their rhetoric because it's going to be more and more diminished. He's already told us that he doesn't want the markets front loading what their next move is going to be months in advance. And that's the way monetary policy should be. And he's allowing the long end of the curve to do its freaking job, which hasn't been a case ever since quantitative easing was created at the end in December of 2008. Now look at all the problems that Japan is experiencing because they were the first implementers of quantitative easing, I guess, way back in, I believe, in 2001. The less the Fed intervenes, the more the markets are going to price things in. And then there's one last point on the monetary policy side. They could just sit here. I think Brandon, you mentioned something either today or yesterday that's spot on. Is that are they doing their job by doing nothing and allowing the markets to do the heavy lifting? And the answer is yes. I think that they are. And then I'm going to go back to SpaceX, and I use the Amazon analogy. I do believe that when we have trillion and $2 trillion IPOs trying to assimilate into a market with a certain amount of scarcity of capital, it's going to create massive dislocations that could be exploited. And when you look at the amplitude of SpaceX, I mean, the stock did go up to 200 and it basically lost half its value. And, kudos to anybody that took advantage of that trade because that was a hell of a trade. And stocks like this that have amplitude can have, can have plays on both sides. But I do believe at this juncture, we have to parse Tesla from SpaceX, even though they're owned by the same individual. Tesla's valuation is a massive problem, and they're also in an industry that historically hasn't been good. So valuations matter tremendously at this point to Tesla, in my opinion, in spite of what's going on with SpaceX. In the case of SpaceX, to me, it reminds me of Amazon from 2003 to 2014, where all we would hear Bezos say is that it doesn't matter. It doesn't matter what we're building for the future and reinvesting. And then in 2014, bam. I do think in the case of SpaceX, at this time, valuations are completely inconsequential and they do not matter when compared to the fact that SpaceX is not just a stock, it's a large lever in this market.
Thank you, Eladio. Folks, I just want to go back to the Anthropic news about a $2 trillion IPO. This is important for situational awareness as well. The last time that Anthropic raised capital, it was in May of this year. It was a Series H at a 65. It was $65 billion at less than $1 trillion valuation. So that would take Leo's stake up by 100% of where he last marked it, which is important for him, his investors, his fund, and his longevity. Relative to, I wouldn't say the trades that he's now lost, particularly highlighting Nebius of yesterday, but in terms of his track record, I think there may be some resuscitation of his reputation. But let me leave that there. Andy Kaufman, to your hand, then I'll get to Brandon.
Yeah, I just wanted to kind of bootstrap onto Eladio's comments around level of rates and valuations. The biggest thing here, in when I'm confused about the markets, the first thing I do is, what do I know? And then where are their bubbles is kind of my first two things that I look for. And the biggest thing we have to remember is how much government intervention happened from 2008 through the end of what they said QE. But the balance sheets of global central banks still hold trillions of dollars. And if we just look at the US and we look at their balance sheet, I don't know if it's at 7 trillion, 8 trillion, right around that number currently. I factor that in to be about, if they had to sell that into the market, because that's what an unwind is of a balance sheet, is in QE, is getting rid of those assets. So we still have the training wheels on in the economy, if you will. And what they're doing is saying that's where I saw the bubble. And I'm like, all right, well, they're not going to just sell that in the market can't handle it. But if they did, I suspect we would be running 10 years roughly 2% higher than where we are. And when you think of long-term fundamental value, if you're a fundamental value player on the equity side, a 2% higher rate is going to bring the value of equities down significantly. So when you see these run-ups and a lot of these, equity valuations, they weren't too high originally, but now they're getting to that part that's out of control, and everyone's saying, oh, well, there's no issue, there's no value, because they're looking at interest rates and they're backing in and looking at the long-term value of capital and the whatever they've got to factor in terms of their interest rate play. But in reality, they should be about 2% higher than they are, and that's why these valuations are absurd to me when you look at what the real level of interest rates should be. So the question is, what is real? It's hard to say because they aren't being sold into the market, and they are where they are.
But Andy, isn't growth offsetting some of this growth? Because we're expected to, I believe, print a 5.9 real GDP growth, and you're absolutely right. This administration or
What I'm
Parliament,
saying is, if the Fed sold $7 trillion of treasuries into the market, we wouldn't have that type of growth, is what I'm saying.
correct.
This wouldn't happen, right? And it would have slowed the economy down. It would have slowed CapEx down. It would have slowed a ton of this situation down. So what I'm saying is that the bubble at central banks that they absorbed from the market that didn't have long-term effects, I believe, are now starting to flow through into valuations, the economy, etc., and causing potential other bubbles other places. The question is, can that bubble pop? I don't necessarily think so, because it's still the lever for that is the Fed selling drastically into the market, and they're never going to do that. It's just not going to happen. They don't want Japan doing it, right, with a much smaller number, let alone themselves. So we've got to remember that there's still this massive amount of government intervention and what I call financial socialism going on, that's going to keep these valuations at a much higher level, I think, for longer. And I just wanted to point that out, which I think is
And
critical.
that makes risk assets go up. I agree, Andy.
All right. Eladio, you want the last word here?
No. I think we gosh, I mean, this is a great show. I do believe. Look, it's Kevin Warsh is going to be a difficult man to figure out at this point, and that's the way I like it. And I want to see the markets do their thing, and I don't want to see another $500 billion announcement in September or October if things start to unravel a bit, because we've actually come back to our highs, and everything isn't absolutely perfect. But I am bullish for the rest of the year, and I think breaking 8,000 on the S&P is going to be an easy task here. And the question becomes, will hardware be able to recover some of its losses, or will we see the rotations that would benefit some of the sectors that are more interest rate sensitive? And right now, I'm looking at Kevin Warsh more as a dove, because not raising rates is equivalent to lowering rates, given the fact that the expectation just less than a month ago was 98% for a rate hike in September. And then literally after one, I believe, employment number that was somewhat weak, that expectation has now gone to about 46%. So I already like the Kevin Warsh Fed. And the question again becomes, what will happen with the midterms, and what will happen after the midterms, both with Iran and the Fed once the midterms are past us?
Brandon, I'm going to let you have the last word. Go ahead.
Yeah, I'm sure the audience is going to love this. Having the last word here. I appreciate it. Quick question. I think the biggest question that we all seem to be circling around is, did we learn lessons from 2007, 2008? Like when I listen to Andy Kaufman and Eladio and others that, again, are way more brilliant than I am and can explain these points better than I can, or more articulate than I can, I learn things. But the question that I hear from all of them is, did we learn lessons from 2007, 2008? And my personal belief is yes. Like we're not talking about bailouts in the sense that we saw. We're talking about governments working together with private sector. And so I had someone DM me and say, you've been negative on Anthropic, but you still said that they have that they're going to, IPO at 2 trillion or whatever. And yeah, because again, we cannot let one of them fail. It becomes a domino effect. And so I do believe that they will do so. Now, I think Eric made a great point talking about it could go down from there because of the multiple reasons we've talked about with the open weight models, open source models, all the different things. But it's still going, in my belief, to have a strong IPO. David, to your point about their last valuation round and Leopold, what was the first thing I said the minute that Leopold story broke? It was overblown. It was way overblown. That young man is not going to fail in the least bit. His Anthropic stake is still significant. He's going to return a lot of money to his investors. And, I see some comments of people saying all they care about is money and, lining their pockets and et cetera. And that's just not true. Like, if you understand how venture capital works, or even these different funds, they are taking funds from pension funds. Their investors are pension funds. When you get to that scale, it's pension funds. It's the 401ks. It's the state backed funds. It's the funds that do go to grandma. It's the funds that do, go to the people that have put in their life's work. So let's just forget about the multiple millionaires that Elon has made, or the multiple millionaires that these other companies, or even Anthropic or OpenAI, have made by just employing people. And we're talking about at the lowest tiers, at the lowest levels, of the janitors, of the the people that work in the cafes in these buildings. Like, forget just about them for a minute. Those are fantastic stories, but they are also increasing the value of the pension funds, that everyday people that have nothing to do with tech or in investing. Those are good things for the country. That's putting money in people's pockets, like real people, everyday people's pockets. And so, yeah, we're on a finance daily show. Guess what we're talking about? Putting money in people's pockets. So yeah, there's other things we have to, be concerned about, maybe on a human level, on an individual level. I do that, all day, every day. My own personal situation is one thing, other people's personal situations. We all take that into account. We're all living on the same planet. But on a finance daily show, yeah, we're talking about putting money in people's pockets. That's that's the point of the show. And so I guess I'll end with saying that I believe this has become too big to fail, but not in the way that we looked at it in 2002, 2007, 2008, or even an SVB situation from 2 years ago when Silicon Valley Bank was going to go under, where it was just government bailouts. It's now the government working together with private companies, which is better for the government, something they should have been doing for a long time. It's better for the companies, for these private companies that are going to become public companies, because it's more revenue for them. It does get them to profitability. It does get them to where everybody talks about fundamentals of a company and they got to make profits, et cetera. It does do that. And then it also puts money in the average everyday person's pockets. I'm sure many of you who maybe work at a job and have a pension fund, or have a 401k, or have a 457 plan, or all these different plans, are probably involved in some of these companies without even knowing it, because it's
Randy,
not managed by you. Yes.
can I respectfully cut in here? I just want to offer the counterpoint. All right. First of all, my general sentiment as a person is to the upside. I'm a positive person, right? But and look, it's cool that today's conversation was generally a bullish conversation around lots of things. But whether it be tech, whether it be old line economy, it was generally bullish. Market had a good day yesterday. It's pointing green today. Concerns about rate hike coming down, asset inflation, prices, so on and so forth, innovation. But it sounds to me like the greatest and almost only argument for for everything continuing to march higher is we can't afford to let it go down. There's no reason why anybody would want it to go down. And when Mr. Market or Mrs. Market doesn't care about that ever, and yes, there may be the greatest of intentions around the horn, and it may be so circular in terms of the interconnectivity and the fact that if one domino falls, they all fall. But all that is not a good enough argument for me. That's actually frightening for me. If that is the best argument that people can come up with, that this is for the best. It has to keep going. The music and the party has to keep going because everyone is having a great time.
So,
That
David, let me ask you a question, just quick and to the point. What's the alternative?
the alternative is that sentiment changes because something serious happens to make sentiment change. Like, oh, the US debt crosses 40 trillion, right? Or our rates on the 30-year get so high that we're not saying it's the highest in 25 years, but oh my God, now it's the highest in 30 or 40 years. And people start to think really hard at that time about the risk and the reward they're taking on a bunch of their investments and say, wow, I'm really taking some outsized risk at these really inflated values where it's really not that worth it. Maybe I should go ahead and rotate myself into some fixed income. And it's just about It's just about money flows a lot of times. And all of a sudden, that money flow, right, begets more money flowing in the other direction. It's not as if the technology isn't valuable. It's not as if there was a flaw or fraud was, perpetrated. It's just a matter of a change. And right now, the euphoria is high, like really high. I can hear it in everybody's voices. I'm okay with it too. Don't worry. I've been the beneficiary as well, and I don't mean to be the guy that rains on the parade. But at the same time, you need to keep it in check. A $2 trillion, we're talking about Anthropic. You and I are talking about Anthropic, about Dario making all sorts of bungling efforts and him trying to hold up the fort when it comes to closed source, you know, AI. And he's going to get run out of Dodge by
Wait,
all the
but
open
David,
source.
just to that point, they're looking at $100 billion run rate by end of year. So, like, we're not talking about a company that's not profitable. Like, I have my, things that I don't like about Anthropic. I've made them very clear, but they're still looking at $100 billion run rate by end of year. This is the fastest growing company in the history of humankind.
I'm with you. I'm going to leave it there because we've done this. We've done this in bits and pieces, and we'll just go around in a circle. I just wanted to present the counterpoint. That's all. Not that I'm negative. Not that I am short. Just, just trying to be real, folks. That's it. We're going to leave it here
Valuation
for today.
matters when it matters only, David, and you need to know when to apply it at what stage in a company's development.
All righty, folks. We're going to leave it there. Today was a great show. Really enjoyed it. Everybody's input was really helpful. We're going to catch you back here tomorrow morning to finish off the week at 8 a.m. I think tomorrow is retail sales. We'll chat a little bit about a couple of earnings that are coming out, and we'll see how the day goes. The futures have ticked up just a slight bit while we've been on. Everything up, a third of a point or so. And I hope you have a great day. And thanks again. We'll see you tomorrow. Take care.